All right, everyone, it's Marin here, and I got my buddy Brent Johnson here. And I guess, there's two types of sides. Either you agree with what we're talking about or you disagree. And it was truly wild, some of the comments that we saw on that interview that we did on the panel at the VRIC show that Katusa Research holds with my buddy Jay from the Cambridge House with you and Peter Schiff. And, to be fair, you showed up, you paid the ounce of gold, which the bet was. And man, they re-edited this stuff and they threw it out. So it really is interesting. So I got you guys to bet again. I'm with you on the US dollar here. Before we jumped on this call, Brent, I think the first time I met you was actually at one of my shows in San Francisco in 2015. And you were in the audience and you actually asked me a question. I remember your flashy blazer. So you didn't put the blazer on for me today.
No, I thought I'd take it easy on everybody today. We'll just do nice neutral colors.
Yeah, and that was when I was making the big move on Northern Dynasty. And I remember telling everyone in real time, this is what I'm doing. And in the next few years, we're going to be in a market where the US dollar and gold are going to rise. And people are like, that can't be possible, So here we are. So let's jump into it. Most people know what the milkshake theory is. Most people know what my stance is, but I put money into your fund and I get zero compensation. I'm not trying to raise money here. So the lawyers know, I'm just disclosing. Everyone knows my style. Why don't you say what your fundamental strategy is? Because you and I talk multiple times a day. What are you doing specifically right now?
Yeah, so what we're doing, and again, I think most people have kind of heard my overall view, and that is that, I think, for lack of a better word, we're going to go through the biggest short squeeze in history, and it just so happens to be on the dollar. These fundamental short position on the dollar, and now actually the short-term or the short-term trading positions on in the futures market. There's a big short position on the dollar. I think that needs to get unwound. And when that gets unwound, I think it's going to cause chaos around the world. I think it's going to be the biggest driver for asset prices over the next 2 years. And so our strategy has been to try to position to take advantage of that. We can go into some of the trades that we're doing in more detail, but in a general sense, we're trying to be long the US dollar and long US dollar assets versus short just about everything else. Now, not everything else, but in a general sense, we're kind of short the rest of the world. And, we started this fund about a year ago, not quite a year ago. And initially, it kind of went against us, but we knew that this was just a matter of time before these different knock-on effects started taking place. And, that's really what we've seen over the last 3 months. So, we're excited. We think there's a lot more room to go. A lot of the people who didn't believe us a year ago or 9 months ago now think that this initial dollar move is the whole move. And what we've said is, we're nowhere near the beginning of the end. It might be the end of the beginning, to steal Churchill's line, but we're not at the beginning of the end. And we think this has a lot further to go, and we think the opportunities are amazing.
So a lot of people don't know that I get you to do a lot of my technical analysis work because I do all the fundamentals. I'm like a micro guy, you're a macro guy, so it's a great symbiotic relationship. And back in early March, I was telling you, hey, like these are the 5 stocks I want my subscribers to really get in, and myself, and we took some big positions. And I go, hey, Brent, can you kind of give me your look on the technical analysis side of these things? So what is your framework and your approach to doing this? Because I know you're bearish on Canada. I live in Canada. I'm in Vancouver. The city, which is the capital of financing mining around the world, is actually a place that has big protests, and that's ended with the virus. Hopefully it doesn't come back. But the city's bankrupt. They just announced that they're not bankrupt. Interestingly enough, a lot of people don't even know this, but the city on their books carries about $8 billion worth of real estate. And I haven't even shared this with you. So a friend of mine works with a firm that is doing the third-party assessment. And what is the real market value of that? Probably less than $4 billion, and try to get a lead order. So I've inquired about that myself. And the city's books are artificial. So, what is your framework? How do you go about figuring out how you're going to, play the options or short, Canada, as you call it?
Right. So, I always start extremely big picture, and then I move in. So a lot of people start at the bottom and kind of move up. I always start really big and move in. And so, as I just mentioned a minute ago, and as I've been talking pretty adamantly about for the last couple of years, is that we've got this huge dollar short position that has to get unwound. So as that happens, I think it causes negative side effects for a number of markets around the world. So that's where I start. And then because of that, then I'll go and I'll look who has the most debt, or who has the most debt to GDP, or who has borrowed the most in dollars, or just who has the most leverage within their own economy. And then, I also look to see, well, what if the dollar goes up, what assets does that affect the most? Well, typically, when the dollar goes up, since the dollar is the world reserve currency, and since most commodities are priced in dollars, if the dollar goes up a lot, that would generally put pressure on either commodities or commodity exporting countries that need dollar funding. And so when I look around the world and I see places like Australia or Canada, whose economies have, for the most part, gone up for 10 years, but it's done so as a result of taking on a lot of debt. And then I look at the debt to GDP or the debt to income. I look at the twin real estate bubbles of Vancouver and Toronto, or Sydney and Melbourne. And then I think, well, what are their major industries? And when their major industries turn out to be real estate, real estate, or energy, or commodities in general, that's not a good setup for a spiking dollar, right? So that's the next step down. And then I go, well, not just the dollar going up, but not just oil going down. Like, what are the second and third and fourth knock-on effects of that? Well, you look at the GDP of Canada, and you lay it over the top of a graph of the oil price of oil, and it's not a one-to-one relationship, but it's pretty darn close. And then you think, well, okay, so 6 months ago, Canada had the most hawkish monetary policy in the world, or of all the major central banks, but yet they have all this debt. They're totally tied to oil and commodities. I think the dollar is going to spike, which is going to push oil down. So what does that mean for Canada's GDP? It's going to fall. So what does that mean for the hawkish monetary policy? Well, it means it can't remain. So if the hawkish monetary policy can't remain, what's the knock-on effect? Well, they're going to have to cut rates. Okay, so if they cut rates, well, how do you profit from that? And this is an example of a trade that we did. Is we went through all that big picture, and we kept whittling down. Okay, so now Canada has to cut rates. What does that mean? So what we found was the best, most asymmetric way to play it was to buy call options on Canadian banker acceptance notes. And for lack of a better word, those are just very short-term Canadian bonds, a bet on very short-term Canadian bonds. So if the official policy rate gets cut, those bonds move up in price. So we bought out of the money call options on short-term Canadian bonds in a very small market that nobody really pays attention to. And initially it went against us because, Canada maintained that hawkish monetary policy through the end of the year. And it went against us so much that we said, we thought they were cheap before, now they're even cheaper. And so we doubled our position in January. And then over the next 60 days, Canada cut rates 3 times. So that position, went up 3 or 4 times, and we made 3 or 4 times our money on that position alone.
Good. I like hearing making money.
Right.
Making me money, but I'm personally shocked that it's only $1.40 Canadian to the US dollar. Yeah. And I look at, the Alberta stimulus package that Trudeau's government came up with. It was really a slap to the industry. Yeah. But like I wrote, don't expect anything from Trudeau's management because they are so anti-resource, not being honest with what built this country of Canada. Right. So moving forward, where do you see the dollar, the Canadian dollar, let's say over the next 6 to 12 month time frame specifically?
So over the next 6 to 12 months, I'd probably say it goes north of 150, maybe in the 160 to 170 range. Over the next 2 years, I think it could easily go to $2.
This is an important thing that I want people to understand because so much of the world's junior speculations are in either Canadian dollars or the Australian dollars. That's so right. You have to be careful looking at what currency in the FX. So that's something that I want people to focus on. So now, before we get into the whole swap line charts that we've been going back and forth on and the ideas, what's your take? I'm going to go through some commodities here because, a lot of people know that I cut my teeth almost 16, 17 years ago and being part of a team that built a big copper mine. Yeah. Now I retired from that. I've been pretty bearish on copper, but you make me look like an eternal optimist, and no one's ever called me an optimist.
Oh my God, you're going to put me on the spot again, aren't you?
I am. That's my style.
You're going to make me make a bunch of people upset. So listen. Sometimes people think I say things just to get a rise out of people, and it's true. Sometimes I do that.
But
But
looking at your Twitter engagement, I'm shocked you engage so many of these trolls.
yeah, well,
Yes, trolls, I'm looking at you.
yeah, it's kind of fun. It's kind of fun. It, whatever, water off your back, no big deal. But like it, if what I think is going to happen actually comes to happen, I think copper goes to 150, and in reality, I think it probably goes below that. How far below that? You know,
But you're also making the assumption that the US
yeah,
dollar really rips
that's
relative
right.
to the peso, and you're
That's
looking
right.
at Chile and Peru's currency to
That's
the
right.
Canadian currency, the Australian currency. So
That's
people
right.
understand what's going on here.
Yeah, I don't think it's going from, what is it, 225 right now or 230. I don't think it goes there overnight, but over the next year and a half, 18 months, wouldn't shock me at all. And I think if it were to go to those levels, I think the last part of it would happen very quickly, very similar to what you saw in oil over the last week. Now, copper's not the same as oil, and you don't really have the same delivery issues that you have with oil. Copper's a little different. But my point is with this COVID thing, is a real big deal, because you literally have stopped the global economy from moving. And I don't have time to get into all the details, but in a debt-based monetary system, if capital doesn't flow and move, it literally comes crashing down. And when you lock economies down and don't let people go out and don't let people work and don't let trade goods flow, it essentially takes the monetary velocity to zero, and it just can't exist in that type of scenario. And so when that happens, you get markets that are just seeking liquidity at all costs. It has nothing to do with fundamentals. It has nothing to do with the normal supply demand characteristics. It literally has to do with get me dollars no matter how you do it. And that's kind of what we went through a month ago. And I think that will happen again going forward.
But it's funny, Brent, the pushback last year when I did that thing for Raul, a mutual friend of our owns Real Vision. And I talked about quantum economics and how, this negative interest rates are going to go lower and deeper. And, we're entering imaginary variables and it's deflationary. And people just couldn't accept that. Like the amount of negative, this guy doesn't know quantum mechanics. I'm going, I did teach it, and I'm sitting here going, geesh, like there's like this religious, just what people understand. Both you and I are very bullish gold. I'm one of the largest financiers in gold. I own a lot of gold, and a lot of gold companies have built out of this office. But that doesn't mean we don't talk about the reality of the near term. So let's talk about the near term pressure here. In this, we're seeing it. Like, yes, this crash on April 20th in oil, that was a supply. That was just a flat out storage issue. Supply is not an issue. Demand is down because of it. But fundamentally, oil around the world, like the May pricing is now flattening significantly. The curve is going down. That's deflationary. And the market hasn't yet accepted this. So where's gold here in the near term for you?
Well, I continue
near term meaning within 6 months.
I continue to maintain that the gold will retest the breakout zone that it broke out of last summer. So I think we go back to the $1,400 level before we then go higher. Now, people have asked me, well, will it go below 1,400? I don't know. It might not even go to 1,400. I own gold. I think everybody should own gold. But to your point, in the near term, it's very possible we get more liquidation events. I think last month was a very good example of the fact that gold might be worth more than dollars. But if you need dollars and you don't need gold, you sell your gold to get dollars. And you saw that big spike down in gold. Now it recovered extremely quickly and we're right back to the highs. And, maybe that's it. I don't think it is. I think we'll go back down and retest.
Well, I also think that something people aren't talking about. You had half the refinery shut down. You have over 120 or whatever the number is, over 200 primary silver and gold mines shut down. So it's about 6-7% of the primary supply offline. You have all these issues within delivery of, there's no actual gold issue in London, but, get it here in North America, there's an issue, right? Plus with the virus, no one's wanting to knock on your door and do delivery of gold and waiting in line for gold. So with all of these factors working for gold, and if it doesn't break out here above the 1,700, what my stance is, it's probably going to test this range bound. And it's really trying, but it looks like it's not going to break through.
I mean, To
be determined.
If gold is going to break out, I think it needs to do it in the next 2 months.
Yep. I said 90 to 120
Yeah.
days. I totally agree. Give it enough time for that second wave kicking in. Let's see what the virus does. So now the only crowd that is more passionate than gold and silver are the uranium bugs. And boy, do they get angry at me when I talk about my cut to kill concept. You're familiar with all that. What's your take on uranium here over the next 12 months?
Well, again, so I'm going to, it's always funny. I got about a year and a half ago, again, on Twitter, I literally just, I'm not an expert on the uranium space. You know more about uranium than I'll ever know. There's a lot of people out there that know more about uranium than I know. What I understand is how the monetary system works. And in a monetary system where I think the dollar is going to go a lot higher, I think that's going to be very hard in the short term for uranium to break out. Now, I'll tell you a funny story. About 15 months ago, it was at the beginning of 2019. I had followed the uranium story 2 or 3 years earlier, and it's always been the big thing about uranium is that it's not an if story, it's a when story. And I agree with that. Uranium is going to go through the roof. It's just a matter of when. And I hadn't followed it as closely in 2018. So at the beginning of 2009, I literally went on Twitter and just said, is there anything new as to the when of this uranium breakout? Has anything changed that wasn't the case 2 years ago? And oh my God, I got so many people yelling, coming at me saying, well, you don't know anything about uranium. Uranium's going through the roof. And I was like, maybe it is. What new has happened in the last 2 or 3 months that wasn't the same a year ago or 2 years ago? And, long story short, my point was when the dollar breaks out, uranium will go down. And of course, uranium went up January, February in 2019. And then what did it do? Then it fell over. And I actually went back and looked up those conversations on Twitter, and all the comments had been deleted. So
the interesting thing about uranium is the first time we went to Kazakhstan, they were producing less than 1 million pounds, and the Kazakhs are a very resourceful bunch. Boy, these are workers, and they don't have to deal with the political tape that you have to in Canada or the US. So, when they get the orders from upstairs to get drilling and get going, the issue from Kazakhstan and from my cut to kill concept with the FX advantage, the two Achilles heels, the first one is, if this virus does stick around and it is worse, remember, a lot of these mines are in remote areas, so they're camps. The virus spreads a lot more quickly within a tight quarter and on these camps. And the drilling you need to do for an ISR facility on the injection wells and the retrieval wells, if they get behind on that, let's say if this virus sticks down, there's zero drilling going on in Kazakhstan right now in any of their ISR operations. ISR is very different than let's say an open pit mine or an underground mine. You got to keep drilling ahead of the production facilities, keep injecting the acid, let it build up. You got to build up the reservoir with the fluid and then pull it out. So if this sticks around for over 90, 120 days, they'll be behind their drilling, and the big production risk is going to be 2021. The other issue is sulfuric acid. So 50% of the world's sulfuric acid comes from China, 25% from the US. The last time this was a pinch was in 2006, and that's when you saw that massive run. Nobody talks about the sulfuric acid angle, and that's kind of one of the key reagents. If there's other reagent issues logistically to get into Kazakhstan, that may potentially, May 5th is when Kazatomprom publishes their numbers and probably gives their guidance. I think 2020, their numbers will be actually lower than they expect. And then the real issue is how long this virus goes on, what will it affect 2021? In Canada, Cameco, which is the largest producer here in Canada, they shut down Cigar Lake, and they weren't making money on it. So they were essentially using the virus as an excuse with the unions and with the government. I don't want to make enemies saying that, but I think it worked in their advantage. So their contracts are 38. So they got to go and soak up about 11 million pounds in above ground storage. Won't be enough, but it'll help, right? There's a lot of storage above ground. So uranium's finally cleaning up. But I think the real play in uranium, it'd be interesting. You and I have chatted. I think it's going to be what the DOE just announced today. Tomorrow, so what's today? Wednesday, April 22nd. So tomorrow, the 23rd, Thursday, the DOE is going to announce what I've been saying is going to be some sort of 3 to 5 year plan to buy anywhere between 150 million pounds of U.S. uranium, and that's for their DOE stockpiles. Remember, under Obama, they were selling below the cost of their producers, so they cannibalized themselves because who wants uranium, right? You think America used to be the largest producer of it 30 years ago. Now they produce zero. And I think the place to be, if you are going to be a uranium speculator, is in permitted, built, producing, American-made facility, because you're going to get a bid from the American government in American dollars, and you don't need to deal with a non-swap line nation in the middle of Africa or the Niger and the Arlet Basin, where A, they don't want you, B, if you do build it, they're probably going to take it. And we can, maybe this is a good segue into the whole swap concept. And you've got, it'd be interesting to get your take on all that.
Yeah, so it's actually ties right into what I've been talking about for the last couple of years, and that is that, I've used this analogy of the Highlander analogy, right? Where you've got these two big immortals. You've got gold and you've got the dollar. And eventually they're going to have a battle, and eventually gold's going to win. But before we get to that battle, a lot of smaller battles are going to take place. And my point has been that until that final battle takes place, the dollar is going to run around the world and cut the head off of all these other currencies. Well, the swap lines is like the sword that the Kurgan, the big bad guy that runs around and he uses. I have always said that the dollar will be weaponized. They've weaponized the dollar in the past, but now it's really become clear to me that it's going to be weaponized, because they have extended swap lines over the last month to certain countries and not extended it to other countries.
And maybe we should really explain, the whole point of this interview is to get a inner glimpse of how Brent and I talk to each other. And, we talk multiple times daily, on weekends, nights, all sorts of times. But explain what is a swap line and why it's getting zero attention anywhere. And it's like one of the most important aspects.
It is one of the most. So, well, let's take a step back from there. The reason they're important, and part of the reason that I have been so bullish the dollar, is the dollar debt in the world. So everybody talks about the 24 or 25 trillion that the US owes in dollar debt. And that's a big problem. But the real problem, the problem that has shown up in the last, call it 3 to 4 months, is the dollar debt that the rest of the world owe. And not just the dollar debt, but the ongoing funding needs, because a lot of these companies outside the United States still fund their ongoing daily businesses via dollars or euro dollars. Dollars located outside the United States are called euro dollars. And so whether you like the dollar, whether you hate the dollar, whether you think it's a good currency or a bad currency, it just is the global reserve currency, and companies need it. And the reason that they have borrowed in dollars is they get a lower rate when they borrow in dollars than when they borrow in lira or reals or pesos or whatever it is. And so as this dollar shortage has intensified, and as the flow of capital has decreased, and as the velocity of money has fallen, those dollars have become harder to get. And it makes it harder for those companies in those non-US countries to get the dollars to service that dollar debt and to service those ongoing operations. And whereas the US government or the Fed can print, quote unquote, print dollars or offer dollar liquidity to the domestic market, the ECB cannot offer dollar liquidity to their market. India cannot offer dollar liquidity to their markets. Indonesia cannot offer dollar liquidity to their market, because the US is the one that decides whether they're going to print dollars or not. The only way that you can print dollars outside the United States is further extension of credit. But when you get into a credit crunch and credit starts rolling in rather than being expanded, you get this credit crunch. So they've set up these swap lines. The Fed has set up swap lines with countries around the world in order the Fed will loan dollars to the ECB. And the ECB will pledge euros as collateral. And then the ECB will go out to their countries and say, we have this amount of dollars, you need to bid on them, how many you need. And then Italy's central bank gets dollars from the ECB, and then they go to their companies that need it, and the companies bid on their allocation of dollars.
But think about the geopolitical angle here, right? It's just wild. Like the loans, just so people know, the swap line loans are either in 7 days, so 1 week, or 84 days, which is 3 months. And they range anywhere from 0.3 if you're the Japanese. The Koreans, unfortunately, are paying a higher rate than Iran. They paid as high as 1% during that loan. But let's think about Trump here. Let's really nail this down, because no mainstream media has talked about this angle where if you're Trump and you're sitting there going, wait a second, Powell has all this control with the swap lines.
Yeah.
I want to internalize this because I can throw some geopolitical leverage. For example,
Absolutely.
An obvious one would be Airbus versus Boeing.
That's
right?
the perfect one. We've talked about that on a couple occasions, right? It's a good example because it makes it people for understand. It'll happen in more things than this, but this is a good example. The last thing that Trump wants to see is Boeing to go out of business. A month ago, he even said, Boeing's a great company. It's a U.S. asset. We can't let it go bankrupt.
The national defense, yeah.
But, one of the ways to bring Boeing out of bankruptcy or out of their troubles and get them growing again is they've got to get new contracts, right? But who's their biggest competitor is Airbus. Well, Airbus is a French company. Trump, when he finds out, when he's making his case to bail out Boeing, and he finds out that Powell is bailing out the ECB, who is in turn bailing out France, who is in turn bailing out Airbus, he's going to say, wait a minute. Or he could say, wait a minute, I want some concessions on this or that.
And he's going to get it.
Or yeah, exactly. And if he pulls those swap, and listen, maybe he doesn't do it with the ECB right away, but he could do it with Indonesia, or he could do it with Brazil. Maybe they have a new
Mexico.
Yeah, let's forget about Boeing for a second. Let's pretend they want to, put forth some new foreign policy in the Middle East, right? And they want big buy-in from around the world. And Brazil says, no, we don't want to be any part of that. And he says, well, do you want the swap line? Right? You actually saw this a week ago. Bolsonaro came out and backed his candidate, or not his candidate. The U.S. wants a different president in Venezuela, Guaido, right? And so, shortly after getting the swap line, Brazil came out in support of a new president being put in place in Venezuela. That's not a coincidence.
It's classic. Like, you're not going to see Russia getting a swap line. You're not going to see China getting a swap line.
Right.
The whole concept that, we can show the first chart here that you're looking at is the top 10 gold producers in the world.
Yep.
And when you look at it, you go, okay, this to me is the first of its kind in the world, but it's really signaling, what do you think is going to happen in non-swap line nations? Well, they're going to be influenced by non-American foreign policy. So that means Russians, the Chinese, elsewhere. So you're going to see way higher risks. And the point of this chart that I created was to say, wait a second, why is something in Nevada getting the same discount as something in Africa? From an MPV analysis and all these aspects. I'm going, this doesn't make any sense. And that's coming from a guy like me who, during my 20s and 30s, I literally lived on the road, I've worn bulletproof vests to get to oil wells in Iraq when I was doing the mining concessions in the Balkans. In Kosovo, we were the first there after the independence there. All of these aspects, you're sitting there going, after you kind of been there and done that, the movie Gold shows how cool it is trying to build find a gold mine in some exotic. It doesn't work. Okay. Right. Now it works once in a while, but more so than not, it's a failure. So what's your take on my whole swap line? Are you exposed to positive swaps, negative swap nations?
Listen, I think if a company has high exposure to country whose gold mines are in countries that do not receive swap lines, you should factor in a higher level of risk for that country than for a gold mine in a country that has swap lines.
Yeah, because the country's not going to fuck with the U.S.
Right. And listen, again, whether you like it or not, these countries need dollars to operate on the global stage. If they cannot get dollars through traditional means, and because either the global economy is slowing or their other industries are under pressure, the governments are going to look internally to get dollars. And what better place to get dollars than the industries that sell their product in dollars? It's a pretty natural place to look, and gold is one of them.
Totally. And it's like the first thing the non-negative, I call it the negative swap line nations, are going to do is like, well, before we tax ourselves, let's tax the foreigners. We don't like them. They're bad guys and they're raping our world. So the next chart I want to show is the royalty and streaming swap exposure. This has never been done before. This is a concept that I kind of just came up with, and this is on producing cash flowing assets that they have. And you look at someone like Franco-Nevada. I've sat with Pierre Lassonde, super cool guy, super successful, adore the man, just classy. But you're looking at it, and they have for only 60% of their cash flow is in negative swap line nations.
Yeah.
And it's trading at all-time highs on metrics over 35 times free cash flow.
Yep.
You know, you're looking at these, it's trading at touching over 3 times NAV, you know, and the market thinks that this is the lowest risk way to play it. And I agree it is, but when you're paying 3 times NAV and you're exposed that much to negative swap line nations, you got to start asking yourself, what's going on here?
Yeah.
Right. So that was the point of this metric, because everyone is always asking me about these royalty companies. I said, look, in 5 years since I've had my own firm, I've been doing this for almost 20, but the 5 I had in my own firm, 4 of the 5 have hit my target. They have come close to NAV, like Wheaton Precious Metal used to be called Silver Wheaton. I was in Africa with Randy, who runs it. Super good guy. Like, just every one of these companies are run by good guys that I know personally, but they're not cheap right now. And then if you look at their exposure to the negative swaps, what I'm trying to emphasize to everyone is gold is still in this super cyclical sector. Resources is still very high risk. And I think nobody's really paying attention to the increased risks we're going to be entering here. Everyone's focused on the virus, and the government Fed is going to just stimulate and save everything. It's not going to be enough now.
Yeah, and I think this is absolutely, and it's not just important for the investors who are listening to this. It's if there's any executives at any of these companies are listening to this, this is not an issue you can ignore. It's easy to kind of ignore it right now, because right now the swap lines are open. The central banks have come out and provided liquidity. Gold's at an all-time high. The miners have bounced back. And so it's easy to focus on just the positives. And listen, if you're running a business, I know you need to be an optimist, and I know you need to think about the upside. But this is a problem that is not going to go away. And in fact, I think it's going to get worse. And to ignore this is extremely risky, because, you know, this chart that you have, I mean, again, Randy's he's got a great business, but, you know, what has he got? 30% of his properties are exposed to regions with no swap lines. If gold goes back to 1400 and liquidity stops, and these countries don't have dollars, I'm not saying there's no guarantee that it's going to become an issue, but it has the potential to become a big issue. And so therefore,
even if you look at the chart of Sandstorm there,
that's a perfect one. Perfect one.
Good buddy runs. Nolan's a great guy. Like, look, when we spun out the royalty company, the lead order 10 million came from my office back in
the Turkey property is a great property, right?
It's a hot maiden. I financed it with Nolan in 2015. These are smart guys. I can't emphasize enough how good they are. But 1/3 of their NAV is in Turkey. Now, you tell me what Erdogan's going to do. And look, I'm a big shareholder of a company that has a bunch of assets. And before I got involved with it, it was one of the top investment bankers in the industry took the company to run it. And I said, Cal, get out of Turkey, you know, because I did a company called Quadrilla before the Thrace Basin, and to move money out of Turkey, how hard it is with the US dollars. You know, do you want to maybe, let's talk about, you might produce in gold, but how do you get that US dollar back home to the shareholders?
Well,
right?
Again, this is a perfect example, and it's a great way to show everything we've talked about. It's a great way to talk about a great gold property run by a great manager who just happens to have a great property in Turkey, but Turkey happens to be a region without a swap line. And it just so happens that Turkey is extremely behind on their dollar funding needs. And they happen to sit in a geopolitical hotspot. And a year ago, they tried to kick out the U.S. and go with Soviet-made defense contractors. Well, I can promise you, listen, I'll say up front, I'm short Turkey, the stock market, and I'm short the Turkish lira, because I think they are just completely screwed, for lack of a better word. Their dollar funding needs are enormous. Now, they do not currently have a swap line, but what they have going for them is, now listen, whether you like Erdogan or hate Erdogan, that is one smart dude. He is very clever. He knows how to play both sides against each other.
He's the modern day Tito.
He's the modern day Tito, and he sits on the most valuable piece of property that's not in the United States, right? It's one of the most important places geopolitically in the world. And so, you know, he is going to need a dollar swap line. And because he sits on the most geopolitical important, he's probably going to get one. But there's going to be some strings attached to that, right? And if he starts to not play ball with the strings,
it'll get pulled.
Those swap lines are going to get pulled. And when that happens, he's going to have to look other places for dollars. And one of the places will be Sandstorm. I mean, it's just a natural place to look. And then you've talked about how, you don't actually the companies don't actually get to sell. If gold's trading at $1,700, you don't necessarily get to sell and book the $1,700 in dollars.
Nor do you get the real FX.
Well, why don't you explain that?
Yeah. So whether it's in Argentina or places like Turkey, you got to exchange at the government rate, not the street. What I call the street will always give you the real going rate versus the government rate. So the government's going to clip you there. So when you convert it to Turkey for the sale of the gold, you have to sell it to the country. Secondly, when you want to convert the lira to US dollars, you got to do it through the government channels. You're going to get clipped there again, and then you get taxed again. And then they're going to bring in more royalties. And I'm not picking on my buddies at Sandstorm. Like, these are my buddies. I got to play poker with them. They're going to give me so much shit for saying this. But look, my style is my style. I've always been an upfront guy. You don't like it. Oh, well, you like it. Cool. But it's not just Turkey. It's not just Argentina. I remember saying this to my buddy, Doug Casey, who's put so much money into a black hole in Argentina. And I always said, Doug, I went to go play on his, as he calls it, the 7-star golf course, and it's cool. But when you get to Argentina, you start realizing, like, I'm a lefty in golf. They don't have any left-handed golf clubs. You're like, oh, crap. So I played David Galland right-handed. And David, I still beat you playing right-handed, the poor bastard. But Argentina is where dreams and money goes to die. And they're just going to it's been bankrupt for 100 years. They're just going to keep doing that same movie. And it's going to spread to Chile, to Peru, Bolivia, Venezuela.
And the other thing to remember, too, the other thing to remember is that people will say, and they have said, listen, Turkey is pro-mining. And that's true. They are. But when you get into dire straits, things change. If it's same thing, like, I'm pro letting my son take guitar lessons, but if we go into depression, he might not get to take them, that type of a thing. So,
don't take away the guitar. I had a lot of fun nights.
I don't want to end up in a band called Era Flare or whatever it was. But
the greatest rock band you've never heard of.
The point I want to make is that when times are good, right now, the price of gold is high. When times are good, it's not a bad idea to think about what could happen when times are not good. And so it's just something to think about. And the other thing is, this is not just gold either. This will happen to copper as well. It will happen to other commodities that are in demand as well.
Well, the biggest commodity, I don't know if you can even call it a commodity, but people have been treating it like a commodity, but they didn't realize that it's pure speculation. And let's bring this to Canada, because I think it's going to not just be Canada, it's all the Australians watching this. There's a movement going on right now that's not really picking up much steam, but both on a commercial and residential standpoint, where people just aren't paying their rent. Staples came out and said, we're not going to pay our rent. Like, well, that's a contract. Well, fuck off. I'm not paying my rent. And then you got the retail side, people going, well, I'm not paying my rent. I lost my job. Yeah. And, in Canada, I remember I used to, I've never been a slumlord, but I had a bunch of units, and I was a young guy. I was 24 years old. And I was like, this is crazy. The rules back then were always on the side of delinquent rent payers. And it's gotten so much worse in Vancouver because now we have the NDP, which is like the socialist. Imagine if AOC was on crack, that's as bad as it is. And you have these socialist movements. What happens to the people who aren't these big REITs, or the rich people who own all these units, the struggling mom and pop who wanted a better life for their kids, and they have a second and third, and they have mortgages on these, but they needed that rental income to come out. This is a domino that no media is truly picking up on. Yeah. But, it's not just 3 months. Ask yourself this. Someone who lives on the road, I'm questioning the whole way I've been running my business, because I've actually been way more efficient by not, when I'm in my office right now, and I've always run a budget office. Everyone jokes about me with my Costco coffee and my style, but this is my money. I'm not wasting it on a fancy office. But guys come in, how you doing? Tell me about your weekend. Really don't give a shit, but okay, tell me about your life. And then an hour, you go through the company presentation. You have 4 or 5 of those a day, and you kind of look at it. Now I rip through these meetings in 15 minutes on Zoom, get to the point. I can be kind of a prick and just get to the point where I can't do that in a personal thing. Things are going to be different. And what do you see in the Vancouver, Toronto, Australian real estate markets? Like, how bad could this get?
Listen, the banking systems of Canada and Australia are in huge trouble. There's just no other way to say it. And a big part of it is these huge real estate bubbles that have built up. Again, Toronto, Vancouver, Montreal to a certain extent, and then Melbourne and Sydney. And even let's pretend that we fast forward 6 months, and let's pretend that COVID is behind us, and let's pretend there's not a second wave, and let's pretend that we don't have to worry about it coming back. Well, I think one thing that companies, both management and I think employees, are going to say, you know what? I don't really need to drive 25 miles to work and pay $50 or $100 a month in parking. I did a pretty good job of doing my job.
35, 40 a day in Vancouver.
Yeah, no, exactly. I did a pretty good job doing my job from home via Skype and Zoom. And I was, it wasn't ideal, but it was pretty efficient. And, going forward, and then, I think bosses and like business owners are going to start thinking, do I really need 50,000 square feet, for all my employees?
Yeah.
Why don't I have half of that? They can kind of mobile commute. They can come in when they want. They don't have to come in every day, as long as they're doing their job efficiently. And the other thing is you can do, it doesn't matter whether you live in, if your job's in Vancouver, it doesn't matter whether you live in Vancouver or you live in Zimbabwe. If you got a Wi-Fi and you got a good uplink, you can kind of do it. So I think the demand for real estate is going to fall, quite honestly.
Well, I'll give you a perfect example, even on my own. So we had we got 9 people here work full time, and our customer service, fantastic girl named Maria, she went and got married. So she went to San Fran, and she got married, and her mom got ill. She went to the Philippines, and she got stuck in quarantine while she was in the Philippines.
Yeah.
So I'm sitting there going to our team, well, what are we going to do? How do we solve this? And we rerouted the phone lines, and until now, no one's known at all that all our customer service is being done on a different time zone with Maria in some small town in the Philippines, right?
But it works, right?
But no, here's the actual part. Before this all happened, a bunch of these independent brokerage firms have been laying off all their analysts. Now, because I drink Costco and I'm a pretty prudent guy and I'm not that flashy, we're in a good financial situation. I've sent a note to my team. I go, look, when I left my previous firm, I went 2 years funding my whole staff, the rent, everyone's medical, out of pocket, didn't make any income, and I made some of the biggest bets of my life in the fund. Right now, I always prepare for like the negative, you don't know what the black swans will be, but you prepare for the rainy days. Yeah. And you've seen my portfolio. And I said, before everything happened, I said, guys, stay home. I'm going to be the one coming into the office and on. I just live in Shaughnessy, which is 5 minutes from downtown. And, when I got to do the media stuff, it's set up. But I'm here for you guys and your salary and your bonuses, but you need to be here for me, meaning you better work your ass off. Yeah. And my staff has been working the hours that I've been getting out of them has been incredible, whether it's Maria in the Philippines, the customer service, my analysts, and, my style. When you and I were chatting at 9 o'clock at night, I jump on the phone with Rob and one of my main guys who talk 10 times a day. And it's kind of awesome. I don't need to, for guys like us, I'm not into sports. Like I can't even tell you who is in like the Vancouver Canucks other than, I know the owner. Other than that, I don't even know one player on the team. I don't care about pop culture stuff. What's the deal? How do I make money? Let's move. Let's get this done. Move forward. And it's become so efficient. I love this.
Yeah. And it's, I don't think the world, it really is. I hate the word game changer. It drives me nuts because some people use it all the time and it's usually not a game changer. But I really do think that COVID is a game changer. Even if it's not the terrible pestilence on the world that a lot of people think it is, it's still going to change things dramatically going forward. What we've just talked about is a perfect example of it. And it's the real estate market in everywhere, but specifically in Canada and Australia.
Canada Vancouver specifically has this really interesting take. So like, again, in Vancouver, you have all these pockets and specifically Shaughnessy, they said the Asian dream or the Chinese dream was a house in Shaughnessy, a membership to the Arbutus Club, and your boy studying at the St. George's. Okay. And, it was this thing where I have neighbors, the houses in the area are very affluent, so the most expensive areas in Canada, but I've never met them. Right. Yeah. It is truly a ghost town.
Have they ever been in the houses?
I don't know. Right. Yeah. And that it's an insurance policy for what they're doing in China. And like everyone, they want the best and they paid for it. But you ask yourself now, Vancouver declared essentially bankruptcy, and they said, hey, property taxes are going to go up, another 35%.
Yep.
So add that to an economy. Airbnb is going to, like, all these people who bought units thinking, I run an Airbnb. Like, I remember a great story where we were at a wedding a couple of years ago, and one of my wife's friends were like, oh, we rented our Airbnb, our whole house. It's going to pay for this vacation. I go, wow, that's pretty damn crazy. And then on their camera, they saw 150 people show up to their party, right? I mean, good job there. So I think the whole thing is like, it was a giant bubble waiting for a pin to pop it, just from the Chinese money flowing in, the illegal money through the casinos being washed, and these artificially low interest rates. And it was a self-fulfilling prophecy, right? And eventually you got to pay the piper. So where do you see it going down? Like, if an average house in Shaughnessy is 10 million, or say 7.5, they're not selling, right? People aren't yet fixed, so that it's so illiquid. What's the average medium is about, I think, 3 in Vancouver. Where do you see it going? 2, 2.5, 1.5, 1? What's your call? %.
Yeah.
Do you see a tax on cash? Because what else would the government want? It could be people with cash, of course, as the bad guys. You're hoarding it. You're not putting it in the system to work and help the system, right?
You're one of those evil hoarders. Listen, this is, I should say, this kind of leads into the next trade, so to speak. I think right now we're in deflation versus inflation. Maybe you say stagflation because some things are going up in price while other things are coming down. But, as the dollar goes higher, it's going to put immense pressure on the rest of the world. But the way that the central banks are going to fight it is they're going to try to spur inflation through monetary policy and through fiscal policy. MMT is coming. Whether you like it, whether you think it's the stupidest thing in the world, it doesn't matter. It's coming.
It's already here.
Yeah,
it's
budget deficit. You think a $2 trillion budget deficit sounds like a lot? Well, it's going to be 3 or 4 trillion.
Even right there, everyone keeps talking about the $2 trillion budget deficit. Well, it's not enough. And Trump always says this imaginary enemy, this war on the virus. You gotta love that style. He's copying the playbook and saying, well, the Middle East, we spent 8 trillion. So he's already saying we're going at 8 to 10 trillion to take on this invisible virus. But the swap lines are already over $1 trillion. And nobody's talking about this. We're talking in the only last, 30 to 60 days. Like,
well, not only that, but you got to remember, the swap lines don't fix anything. All it does is it kicks it down the road. They're loans.
And it's only 7 days to 84 days, and it just rotates.
They're not gifts, right? it has to be rolled, and so the problem just keeps getting bigger. And I promise you, the swap lines are not big enough. It's not enough.
Were you surprised Indonesia got the 15th swap line? There's only 15 countries with swap lines.
You know what? It wasn't, and I'll tell you why it wasn't. Is because
the Chinese
and the Sinopec is like, I mean, it's a political move. It's a geopolitical move. And if you don't think it's going to be used as a geopolitical sword, you're just not looking deep enough. Of course,
you got to love Suharto raped Freeport first and then got the swap line, because that's kind of the line in the sand.
No, exactly.
And that's a perfect example.
It's a perfect example
of what's going to happen to the negative swap line countries. They're going to do whatever they can to steal and then apply for the swaps. Because after you get the swap, there's no funky business.
Or I'll tell you what, if you're in a country who all of a sudden loses its swap lines, you better start looking for an exit, because those governments are going to come for you.
And the Americans have essentially said, you're no longer an ally. There's 15 countries that have pretty much accepted the rules of engagement for a swap line. Okay,
but so the point I wanted to make, though, was that I think that a lot of asset prices and a lot of commodity prices are going to come down, let's call it over the next 6 to 12 to 18 months, whatever the time period is. But after that happens, the next 10 years, we're going to look at an inflationary storm. Like the inflation is coming. It's like that whole, the cure for low prices is low prices. I totally believe that. And, we're going to get supply shocks where prices are going to start to rise, not because demand is rising, but because supply is just constrained. And so I definitely see that as the end game. I just don't think we're there yet.
And let me explain to everyone why I think this negative swap line, positive swap line will actually be bullish for gold. Initially, when the states take assets, let's use Mexico. It was an American company that drilled up the Great Cantarell Basin, and then that got nationalized. People forget that Mexico basically nationalized and stole from the foreign American petroleum guys and no different than Saudi Arabia did. Saudi Arabia did it, at least they bought it out at a deemed fair price from Chevron. But then they didn't use the cash flow like the private companies would to reinvest into the OPEX and, plan the declines, and to fight those declines, they subsidized their social agendas. So you saw one of the great oil basins of the world decline significantly, and that's what happened to Pemex. You can look at so many countries in the world that have, nationalized foreign interests, and they just basically took the cash and didn't reinvest it, and the production went significantly down. I see something similar happening in certain negative swap line nations, where by increasing the tax, the royalty rate, making sure you got to pay all these absurd permitting fees, and then the government interest. Like there's areas in Africa where you have to put up the money for the government, and they get 11% ownership, and then they claw that ownership, just like what Indonesia did to Freeport. It wouldn't be economic to build that today at those rates. It just wouldn't be.
Right.
So the decline in the production would happen. And it takes many years to develop these mines in these positive swap line nations. So you're actually going to see a decline in gold production, and that's going to be a self-fulfilling prophecy into the high price, right? So
absolutely,
that's another reason why I think gold. A lot of guys say, "Oh God, you don't want to live in a world that's $2,500 gold or $3,000." I'm saying, well, wait a second. If you just think about what small tweaks of government take, the natural decline of, you're looking at. The average grade of gold has gone from, down 35% of production. Yep. Production, the costs are up. Discoveries aren't happening. The low-hanging fruit's kind of been discovered. You got to go deeper for lower grades. The porphyries gave that big boost to the production because of the byproduct of gold. And that's where, like we talked about the royalty companies, that was the true success of those royalties. They came like Silver Wheaton, which is now Wheaton Precious. It was all about grabbing the silver from these porphyries that are kind of, the gold miners were like, oh, or the copper guys were like, oh, whatever, we don't even care about that. It's like 3-4% of our cash flow, right? Yeah. So all that comes in, and you're looking at the discoveries, but they're still spending. I'll pop up the chart right now where you look at the annual expenditures. They're still spending over $4 billion a year looking for gold. We're not making any major discoveries. Right. So that's another big, very bullish feature for gold. And I don't think the world's going to be such an awful place at $2,500 gold. I think it's just the natural aspect of government taking more for itself, not reinvesting into the projects, production going down, and just its natural course. I don't know what your take on that is.
Yeah, no, I think that's, again, people often will say Brent's a gold bear, and I am one of the most bullish.
You ran a gold fund when I first met you.
Right, I'm one of the most bullish people on gold that there is. I'm one of these people who
you just don't scream about it like.
Well, no, I made it when I left Wall Street.
I like you, Peter.
Yeah, when I left Wall Street, I made a promise that if somebody asked me a question, I would answer it honestly. Like if I think something's going to go down, I'll tell you I think it's going to go down. If I think it's going to go up, I'll tell you I think it's going to go up. Just because I think something's going to go down doesn't mean I think you should not own it, right? Yep. Because insurance is a long-term play. I think there are times where you can own gold to get rich, and there's times to own gold for insurance. I think right now it's a good time to own gold for insurance. I'm not sure that we're in the time to own gold to get rich. Maybe we are. And if we are,
I think you got to look at it. What's the richest guys in Egypt, and the richest family in Africa? They've invested billions into gold production. Yeah. One of the richest Russian oligarchs, Prokhorov, invested something like 5-6 billion into it. And it's not about becoming rich. Of course, you want a return on your investment, but it's about protecting your net worth in the currency you live in, which is going to be significantly devalued. And we've seen that in Turkey and Russia, Argentina,
that's
everywhere.
That's the other thing that a lot of people forget is I have said for I actually started saying it in 2016, that if I was not a US dollar investor, I would be buying gold hand over fist. I just happen to be a US dollar denominated person. Now, gold over the last 3 or 4 years since I was saying that, gold in all those other currencies has gone to its all-time high. Now it's getting close in the US dollar. It hasn't quite got there, but it's close. And so we're almost to the point where it's breaking out in all currencies. And so if that happens, then, I'll be fine. I own gold. I think gold's going through the roof, but I still think it's possible that in the short term it goes down. just because of what I think the dollar is going to do. Doesn't mean I think you shouldn't own gold. It doesn't mean that you need to sell all your gold. Just be prudent, be prepared, and it just open your mind to the possibility that it might actually go down in the short term. That's all I'm saying with it.
What's your most recent trade you put on to put your, ass on the fire here for everyone watching this? Just to, people always want me to give my last trade.
It's the 22nd. I actually tweeted out a chart earlier today. I tweeted out a chart of copper. It's a 20-year chart where it broke the 20-year support, and then it bounced back up and retested the 20 years that was previously port's resistance. So we shorted copper this morning, and we shorted First Quantum this morning.
So for open disclosure, you and I chatted about all that, and First Quantum's assets are all in, Panama is a US dollar.
Yeah.
I don't know how to explain.
It's their official currency.
It's their official currency, but their African stuff is definitely negative swap lines.
Yeah.
They did get a lifeline today, because I always talk about these bankers. They love to extend, pretend, and amend, because no banker wants to actually roll up his sleeves and run a big operation. Now, I financed that mine that they call Cerro Panama today. But back then in 2006, it was called Cerro Periquilla. I've been to the site. It is a big, big, complicated mine with the Chinese partners. So what you and I discussed was, what's the negative here? Well, the Chinese could do what they did with Paladin in the uranium world and let it all go to zero and just kind of buy the asset, and then the equity goes to nothing. Or they can be a partner and try to make sure they just get the offtake. So, not quite sure what the Chinese partners are going to do there, but there is some, the bankers gave them a lifeline today.
Yep.
That's the 22nd of April.
Yep.
So you really think that within the next 12 months, is that the time frame that copper could go under $1 US per pound, or $1.50?
I'd say 12 to 18 months. Yeah.
So within 18 months, copper goes under $1.50.
Yeah.
Under $1.
I actually think it'll go to around $1.
Wow. All my copper buddies, these are guys that I've spent 10 years very friendly with, whether it's the Copper Mountain, Tazico, the Capstone, the Lundin mining guys. I don't know if it gets to $1, but part of the reason why I retired from Copper Mountain was I'm very bearish on copper also. More importantly, everyone talks about the green dream, the electric revolution. Maybe with the government stimulus, they'll revamp all of the transmission lines, but we're just not there yet to become a Tesla world. We're just not there yet. I don't know what your take on that is, but that's been the savior for copper is, all the vehicles are going to go copper. And
I mean, maybe long term, but again.
Oh no, that's what I say. I think long term, but within the next few years.
Yeah, I just don't think. And that's the thing. A lot of times people say, yeah, but Brent, people are fed up with the dollar. They're fed up with it being used as a weapon. They're fed up with the U.S. being a bully. And I completely agree. It just so happens that the crisis got here before they were able to do enough about it. You know what I'm saying? Like, It would be great if they had come up with a way to subvert the dollar before the crisis hit. But in my opinion,
still 60% of all the reserves are still US dollar.
Yeah.
Then you have the euro makes up maybe 20% around there.
Yeah.
And then the yen, and then, it's still the yuan and ruble.
Yeah.
I spent a lot of time studying that whole concept in my book.
And the thing is the other thing that's important to remember, and I've tried to start pointing this out a lot in the last year, is that just because you think something's going to happen doesn't necessarily mean you like it. It doesn't necessarily mean that you support it. Doesn't necessarily mean that you want it to continue to be that way. If I had my way, maybe we'd be back on a gold standard, or maybe we would have honest money. Maybe we'd kick all the politicians out. But it's just not, I wish the U.S. was not a bully. I wish the U.S. did not use swap lines as a geopolitical tool, but they do, right?
Now, Brent, as a San Franciscan, milkshake drinking, soy latte sipping guy, who wins the election in the U.S.?
So I still think Trump wins.
Even if, let's say, something happens to Biden and either Hillary or Michelle comes out of the woodwork.
Then just because. Well, I think if Hillary comes in, then Trump still wins. I think if Michelle Obama joined the ticket, that would be a pretty tough ticket, I got to admit. So, It's going to be interesting. And it's, you know what I find most interesting about it though, is that Trump being in power has been a big part of the milkshake theory, because he kind of put the hard line on
first.
Make America first, and he took a hard line on China, and he did some things that weren't popular, but he raised the issue to a level that even if he were to lose, I don't think the Democrats can walk it all the way back. So even if a Democrat wins, I don't think Biden can turn around and be easy on China. I don't think Biden can turn around and take it easy on Russia or whoever it is, right? Because it's been brought up to a level to where a lot of the people in the United States, again, whether you agree with it or not, a lot of people agree with what some of the things that Trump has brought to the fore, especially with regards to China, especially with regards to trade, especially with regard to local manufacturing, especially with this COVID thing, the fact that we need to get, imports from China in order to deal with this.
Supply chains are changing.
Supply chains are
real
changing
time,
regardless of who's in power. So,
and it's not just medical supplies. It's not just going to be for jobs. Yeah. It's my whole concept I said a while ago on uranium. They're just going to say, wait a second, we got tons of uranium here.
Right.
We just slap on a tariff on the Temex or the Russian former Soviet stuff, which has essentially been subsidized, and they're using American technology.
Right.
And then you just basically, whether it's 45, 50, I don't know what price, and then you just guarantee the DOE style, because what if Putin did execute his true plan and he pinches the American, 1 in every 10 homes in America is powered by Soviet fuel. A lot of Americans still don't understand that concept, so
I'll tell you what, what I would just say, and we've talked about this before, is that I kind of feel like I've spent the last 20 years getting ready for the next 2. I've learned so much in the last 20 years. And listen, there's a lot I don't know. I'm still going to make a ton of mistakes, no question about it. But I feel like the work I did in the first 10 years taught me how Wall Street worked. The work I've done in the last 10 years taught me how the monetary system actually functions under the covers, so to speak. And I think the next 2 years are just going to be earth-shattering in so many different ways. And I am so excited. It's not going to necessarily be fun. It's not necessarily going to be pleasant. It's going to be kind of like a roller coaster. It's going to be scary at times. It can be fun at times. But I am so excited for the next couple of years. I think the opportunities are almost immeasurable.
I just hope, like yourself, I was, the first 10 years of my career, I was lucky to be mentors with some of the biggest names in the business. So I learned from them, and I had that, I was very lucky in that stance, and I traveled the world. But I really think the difference between the next 5 years versus the past 20 is this whole G2 world where, we went from a globalized area to a deglobalization. And if I'm right about my negative swaps and positive swaps with what's going to happen to these resource companies, I could see so many people get caught in these promising ventures and it just can't get their capital out. So I stressed everyone to truly start paying attention to the geopolitical risks of where the cash flow is coming from. And even if this is such a promising mine, how do you get your cash flow back home to your trading account, into your bank account, right? So I think a lot of things are going to really change and be questioned here.
Yeah. Well, hey man, it's always good to talk to you.
It is fantastic. We'll send this out, and hopefully everyone enjoyed just a casual conversation with me and Brent.
Awesome.
All right, buddy. Stay well. Stay healthy.
All right. Bye.
All right, buddy. Bye-bye.